So, like Catherine said, my name is Paul Burkelo. I work with Powertrust, running our operations, working directly with project developers around the globe. I primarily work with our project partners in Sub-Saharan Africa and Latin America. Also have a colleague, Girish Narang, who is based in New Delhi, who works with our South and Southeast Asia partners. And happy to be sharing more about our opportunities to secure additional sources of revenue for your distributed solar projects. And of course, how you can do so through Odyssey. We've been partnered with Odyssey for a bit over a year now. And there are some exciting opportunities that we've made available through the platform. We're going to go over those in detail today. And shall I dive straight in? All right. Okay. So, quick overview, everything we're going to cover today. Tell you a little bit about Powertrust, who we are as a company, our business model. We're going to spend a little bit of time introducing renewable energy certificates. I know this might be fairly basic for some of you, but I always like to make sure everybody's on a level playing field going forward. So we'll do a little bit of background on the different types of certificates and how DRECs fit into that. And then, of course, we'll share how you can work with Powertrust and some of the opportunities that are available through Odyssey. If you have questions at any time, please add them to the chat. Happy to address those at the end. We'll have plenty of time for Q&A as well. So Powertrust, our mission is to connect the world of corporate energy procurement with very high impact, small scale distributed renewable energy projects around the globe. Specifically, we're working with solar. And we're working with some of the world's largest energy buyers. These are Fortune 500 companies, typically based in Europe and North America, but they have operations around the world. And they're looking to secure clean energy to power their operations everywhere they operate. These are customers like Salesforce, REI, Netflix, others you may have heard of. These are companies that have very ambitious climate targets who are looking to be climate leaders, powering 100% of their operations through renewable energy. And we purchase renewable energy in the form of DRECs, or distributed renewable energy certificates, from a network of project developers around the globe. You can see a few of the names here, including some larger ones you may recognize, like Husk and OMC, as well as many smaller nonprofit mission-driven developers. We work with developers and partners of all sizes and types. The first question to answer is, why do we focus on small-scale solar DRE when our customers are often used to and able to source renewable energy from larger scale utility scale projects in Europe or North America? And the reason is that small scale DRE, as I'm sure many of you are familiar with, creates enormous impacts in the markets where they're appropriate. Typically, we're talking 3 to 6 times the climate impact compared to sourcing the same volume of renewable energy certificates from, say, a wind farm in Texas. And that's because a small-scale solar project in Nigeria, for example, is typically going to be displacing diesel generators or coal-fired grid power, displacing dirtier fuel sources. And so we can create a greater carbon impact by sourcing renewable energy from small-scale DRE. They also tend to support multiple co-benefits aligned with the UN Sustainable Development Goals. These include, of course, energy access for populations that have never had access to reliable energy before, but often they're also powering hospitals, schools, farms in areas of food insecurity, and often promote gender equality outcomes as well. They tend to be more resilient, more affordable to deploy, and much faster to deploy than utility scale projects, talking about timelines of weeks and months as opposed to years to get a project built. And when you aggregate a bunch of 10 to 100 kilowatt projects together across thousands of projects, you can add up to a volume of renewable energy that is meaningful to our customers, who are typically buying gigawatt hours worth of certificates every year. We are currently operating in 9 different countries. We have projects in 9 different countries. We're actively sourcing in many more, and we'll go over some of those new opportunities a bit later in the deck, adding up to over 100 gigawatt hours a year that we've currently contracted for. Like I said, I lead our global operations, focusing on our work with project developers in Latin America and Sub-Saharan Africa. Girish is our Southeast Asia lead. There'll be contact info at the end, so you can get in touch with us directly. And like I said, I want to give a quick overview of renewable energy certificates and how they relate to DRE. Again, this may be basic to some of you, but I'd like to start with a well-rounded introduction. And of course, when you're working in this world, there's a soup of acronyms that you have to become familiar with. And so quick language review. We're going to be focusing primarily on three-letter acronyms today: the REC, Renewable Energy Certificate, the IREC, or International Renewable Energy Certificate, and the DREC for Distributed Renewable Energy Credit. People often use certificate or credit interchangeably, and all of these together are referred to as environmental attribute certificates. That's a generic term for any form of certificate, REC, IREC, etc. Throw one more out there. In the United States, we refer to them as RECs. In North America in general, Europe typically refers to them as REGOs, or just GOs, guarantees of origin, renewable guarantees of origin. They're the same thing. And for a little bit of history, these certificates grew out of compliance markets and regulation requirements in North America starting around the early 1990s, when US states were requiring heavy emitters, utilities, steel plants, et cetera, to source a certain percentage of their portfolio of energy from renewable sources, renewable portfolio standards, many of you may be familiar with. In order to track that, they created a certificate, the Renewable Energy Certificate, so that once the power flows through the grid, it's possible to attribute its source. In the early 2010s, a lot of companies started to realize they could use the same mechanisms to account for their own energy consumption. And the voluntary market really took off in the late 2000s, early 2010s. The people who are buying RECs in the voluntary market include these global corporations that I've already mentioned, who are some of our customers. There are also many small businesses who are sourcing renewable energy this way, and it's even open to individuals. There are marketplaces where you and I can go and buy RECs for our own purposes. Give you a hint of how big this market is. About 1,400 terawatt hours in the US and EU. And forgive the data bias on the US and EU, but there's one reason for that is many of our customers are headquartered in Europe, North America, but they're sourcing for their entire global operation from their HQ. So many of these numbers often include some of their global figures as well. And we'll go over how the opportunity is expanding internationally as well. In the United States alone, it was a $12 billion market in 2021. The majority of that is in the compliance market. As of June 2023, about $2 billion of that was voluntary activity in the United States. That's expected to grow the total market to about $30 billion by 2030. And about 5% of that is in the voluntary market. That's because typical voluntary prices are quite low, and we'll go over how DRECs are addressing that and making it more worthwhile for DRE projects. But the important point from our customers' perspective is that these voluntary purchases, especially by corporations, can be directly attributed to driving at least 30% of all new wind and solar capacity that was built in the United States over the last 10 years. It has had a direct impact on the amount of new renewable energy that's being built in the world. And now that we're expanding this market opportunity to other parts of the world, we're seeing it play an important role in getting new capacity online as well. Now, the way any type of EAC works, whether it's call it a REC or REGO or an IREC, when you generate electricity, it creates two things. One is the electricity itself, refer to that as the electrons, or the environmental attributes, the so-called greenness or cleanness of the power. If you imagine you have two different fuel sources connected to a grid, one of them is fossil powered, the other is, say, a solar plant. Once those electrons flow onto the grid, onto the wires, it's impossible to tell the difference between where they came from. The analogy I like to use is if you imagine you have two cups of water, one of them is a red cup, the other is a blue cup, you pour them into a large river, and then you want to scoop out just the water molecules downstream that came out of the red cup. It would be impossible to do, right? So the only way that you can track that the energy that I used, if it came through a grid, came from the solar plant, is to know that I bought a corresponding number of certificates that were also generated by that solar plant. So if that solar plant generates 100 megawatt hours and I consume 100 megawatt hours, I have to buy 100 certificates, each equal to 1 megawatt hour from the solar plant, retire those certificates, nobody else can use them, and I can say that my power came from that plant and nobody else can. Now, when a company wants to buy renewable energy to power its operations, it has a few different ways it can do this. The most direct one, of course, is building on site, putting solar panels on their own rooftops. Oftentimes, they're not able to do that depending on the available space for the rooftop. If it's in a region that doesn't have good solar resources, it may not be appropriate. If they can't do that, they'll often sign a power purchase agreement. Well, they'll agree to purchase the power from an offsite generation source, and along with that will come environmental attribute certificates. The accounting works the same way. Whenever a project or a company wants to account for its renewable energy, when it's doing its carbon accounting at the end of the year, it needs to have some form of certificate to do that. And then the third option, of course, is to buy what are called unbundled environmental attribute certificates, meaning that they didn't come with the electricity underlying it. So the electricity is delivered to some other party. I can buy the certificates from that project and claim those as long as nobody else is claiming the same thing. And that's typically what we're dealing with when we're talking about DRE. When you're looking outside Europe or North America, there's a framework called the International REC standard, or IREC standard, currently offering attribute tracking in 53 countries. That's growing fairly quickly. In fact, this map doesn't include Zambia, Laos, Cambodia. There are a couple of new ones that have been added to the network here since this map was created. So the most reliable way to check if you're in an IREC issuing country is to visit their website. There's a link here. There's a map there that'll tell you the most up-to-date thing. And the IREC standard works with local governments and regulators to make sure that their policies align with those that are required for robust attribute tracking. The IREC standard is accepted and widely used by all of our Fortune 500 customers around the globe. It's considered the global standard for certifying renewable energy. But there are some challenges for distributed sources, especially small-scale distributed resources, with all existing EAC frameworks. They were all designed originally with grid-connected utility-scale projects in mind, meaning that several things. On one hand, certificate prices tend to be very low. You've got very large projects generating large volumes of energy, meaning that the price for any 1 megawatt hour can be $1 to $5 on average. And if you're talking about a very small project that doesn't generate very many megawatt hours, then that's often not worth the hassle involved in validating that data. Second problem, of course, being the complex, typically very manual data validation processes. The generation has to go through a third party, usually a grid operator, who will certify that it genuinely happened. And that creates a lot of high transaction costs. There are a lot of fees, brokers involved, et cetera. Of course, the opportunity comes from an unfortunate fact that almost 1 billion people around this world have little or no access to reliable, clean energy, and many of them are best served by small-scale distributed resources, especially across the global south, which is why we created the DREC initiative. At Powertrust, we co-founded the DREC initiative along with our partners at South Pole. This was started a couple years ago, working with many partners across the energy access space, specifically not to create a new standard. The DREC initiative is part of the IREC ecosystem, and any DREC becomes certified as an IREC. So the in certificate that's traded at the end of the day is an IREC. We think of DRECs as an on-ramp to the IREC ecosystem for small-scale distributed projects, and it's been designed to solve the challenges I mentioned before. So allows us to aggregate hundreds or even thousands of devices so that we can add up generation to a meaningful scale. It does automated verification across hundreds and thousands of devices through a third-party platform. And that allows us to lower transaction costs to a point where it becomes possible and worthwhile to generate certificates from small-scale DRE. So a quick overview of how it works, starting over here with where electricity is generated. And I trust everyone can see my mouse cursor on here as well. Cool. So electricity is generated at any solar project around the world. The electricity itself is delivered to the off-takers, whether those are households or farms or businesses. The data of that generation is collected in a remote monitoring system. And that's important. We do have to have data being collected through real-time monitoring. At Powertrust, we will connect to that system through an API or through Odyssey. If you're working on Odyssey's platform, we'll collect that generation data in real time. We will then push it, aggregate it together, push it to the DREC platform for validation. The DREC platform We'll run a series of automated algorithms that verify whether or not that generation data is legitimate. We will push that request to the IREC registry, which will then issue IRECs, which we will sell to our corporate customers and then pay for that data from our project developer partners on a quarterly basis as it's delivered. We'll go through a bit more of the nuts and bolts of how to work with Powertrust to participate in that, but that's the big picture overview. The impacts that this can have on a project's viability stem from 4 different characteristics. The first of them being that many of these projects have uncertain project revenues, especially if you're building in a region where there's or hasn't been reliable energy access before. A DREC offtake can bring a long-term firm purchase source of revenue to the project. It's going to be denoted in US dollars, in a hard currency. It can help solve many foreign exchange challenges. Because we're aggregating across many small systems and projects, like I said, we lower transaction costs, but we're also able to deliver volumes to our customers who would never be able to contract with hundreds or thousands of small devices themselves. We can deliver gigawatt hours worth of energy. And then many of our partners are now starting to use this new source of revenue to unlock additional financing, where they can take a long-term purchase agreement from Powertrust for their project's energy attribute certificates to a local bank, say we have additional revenue now, we're able to meet a lending threshold or a debt service threshold, or improve IRR enough that they're able to unlock additional sources of finance. So to give an example, if you have a 100 kilowatt system, say it's powering a remote hospital, which we would think of as having a typical high social impact, we assume that's generating 1,400 kilowatt hours per kilowatt. It's going to be about 140 megawatt hours per year. If the certificate price is at $30 per megawatt hour, which is pretty typical for what we would call a very high impact project, that's going to be about $4,000 per year. If it's an 8-year contract, which many of ours are, it's about $30,000 additional revenue for that project. If it's a $330,000 project, that means we can bring about 10% of total project costs in the form of additional revenues. And some of our partners, such as Enhance Energy, who's a nonprofit developer in India, are using that to cover long-term O&M costs or reduce their tariffs to the customer. We've seen other projects dedicate the revenues towards covering debt service or boosting the IRR on the project to convince investors to move forward. So, how to work with Powertrust. We got 6 steps. We try to keep it as simple and streamlined as possible. Start out with applying online. You can do that through Odyssey. And if you're using Odyssey's platform, I strongly encourage you to check out our programs there. The whole process is integrated to the Odyssey platform, so you shouldn't need to do anything else, or we can communicate with you through Odyssey. You can share documents, etc. And Catherine's going to go over how to do that after I'm finished here. You can also visit our website, of course, if you're not using Odyssey. But again, there are many reasons to use Odyssey, so I'll let Catherine cover that later. You'll share your pipeline and your project registration information with us. We'd like to know about all the projects that you've built to date, as well as any that you have planned in the next year. We'll sign a framework agreement that sets out general terms and conditions of any purchase that we then execute. Once we see your projects, we'll down select those that best match our customers' purchase criteria. So our customers will come to us with a list of requirements saying they want to buy from projects that are powering hospitals in Nigeria for 3 years, for example. And so if you have projects that match our criteria, we'll draft a purchase order to buy a certain volume of certificates from those projects. We'll request certain diligence materials on that. Once we finish that process, sign the purchase order, we'll connect those projects to our platform, which means establishing the API connection. If you're working through Odyssey, then that's fairly straightforward. Once you start sharing data from the project, we'll collect that data, certify it, and then we pay for data collected quarterly upon delivery. When it comes to what kind of projects we're looking for, there's some general criteria. This applies to any project that we're going to purchase from at Powertrust. It's got to be small scale distributed solar, so less than 5 megawatts. It has to be in an IREC issuing country, and the map is on the IREC website. It must have remote monitoring capability. Ideally, that's going to be real-time access through an API. In some cases, if the project is in a region where there is very poor connectivity, for example, we work with some projects that are in the remote Himalayan mountains in India, we will consider the project that can share a data file as a CSV that's directly exported from the inverters at least once per week. Or in some cases, we can rely on manual meter reads that are reported through an app. But these are exceptional circumstances, meaning that the project has to have a compelling reason for us to work with it. And crucially, the project partner has to own the commercial rights to monetize the environmental attributes. This is typically because you own the assets outright, or because you have an agreement in place with the asset owner. If you have customers, investors, if there's an SPV involved, there has to be clear contractual evidence of who has the right to sell the environmental attributes. Now, we have several purchase programs that are live. Not all of them have the same purchase criteria. So just a few examples of some of the criteria that may apply to different programs depending on which one you're applying for. Typically, many of our customers are looking for new build projects only. They want to bring new capacity online. In other cases, if we're looking for existing projects, it must have been commissioned within a certain time frame, i.e. within the last 2 to 3 years. In most cases, we require the project is not yet fully financed, meaning it's still raising additional equity debt or grants, meaning that it can demonstrate that the DREC revenues are going to have a meaningful impact on the project's financing. If a project is already fully financed, then bringing an additional source of revenue doesn't necessarily mean as much to that project as it would to one that is not yet fully funded. Or if it's an existing project, it can demonstrate that it's facing a critical financial or operational hardship and has a need for additional funding to either become or remain operational. These are often cases where we'll consider a purchase, such as a grant-funded project that didn't have funding allocated for O&M. DREC revenues can bring that project back online or keep it online. Or in some cases, the project has to be serving a specific category of energy offtakers, such as hospitals or schools. There are 2 types of projects that we classify at Powertrust, and this helps determine price that we offer for the certificates. So all projects by default we classify as baseline projects to begin with, meaning it's any type of solar project that has strong environmental impacts, because all solar projects do, but potentially limited social impacts. So a factory rooftop, commercial industrial installation kind of project. All projects start out as baseline by default. We then will consider some projects high impact projects if they can demonstrate a very specific, very obvious, clear, and measurable impact on at least one of the SDGs, in addition to SDG 7 and 13, which is energy access and climate impact, because all solar projects have an energy access and climate impact. We're also looking for projects that also have an impact on gender outcomes, zero poverty, food security, the other SDGs. And of course, it has to be clear, obvious, measurable. If you're having to twist a story as to how the project impacts the SDGs, then it's probably not going to qualify. And we'll evaluate these on a case-by-case basis. Our current active purchase programs are in the countries you see here. Latin America is primarily in Brazil, although we're expanding that here shortly to include Peru, Argentina, several others. In Southeast Asia is where a lot of our demand is focused, because a lot of our customers have operations in Southeast Asia. So you'll see that in India, Thailand, Laos, Indonesia, etc. And then in Africa, as of today, we were operating in Ghana and Uganda. We're expecting to open up new purchase opportunities in ideally Nigeria. We're very hopeful for Nigeria within the next 6 to 12 months, as well as others. So our current openings requirements are for about 78 gigawatt hours per year across all of these markets. Prices are averaging between $10 and $30 a megawatt hour, and we're offering contracts that vary from 1 to 8 years, depending on the geography and the specific project. How to apply? Well, like I said, the first place to start is Odyssey. If you're using Odyssey, you can go through that, and Catherine will share more about how to do that. If you're not using Odyssey, you can contact us through our website, and we'll share more information about how to go through that process. So with that, please feel free to get in touch. You can send me an email, you can contact me on LinkedIn, or you can reach out through Odyssey. And with that, I think I'll hand it off to Catherine.
Awesome, thanks. So yeah, Again, feel free to be chatting questions in that Q&A box so that we can make sure we get to them at the end of this session. I'm going to go ahead and share my screen and give an overview of Odyssey and explain how it fits into all of the exciting work that Powertrust is doing. So are you able to see my screen?
I am not yet.
I think it's loading. And I just saw a chat come through. Kindly share the PDF of this presentation. We'll be sending a PDF of these slide decks as well as a recording of this Zoom after our call today. Okay, so I think you're able to see my screen. And I'll get started. So the work Powertrust is doing around DRECs is obviously very innovative and exciting, and we're delighted about our partnership with Powertrust and looking forward to supporting you all as you use Odyssey for applying for DRECs financing, as Paul alluded to, and then also to track generation data for certificate issuance when projects actually come online. So I wanted to spend just a couple of minutes giving a high-level overview of Odyssey for those not familiar. Odyssey is the distributed energy sector's platform to plan, finance, build, and operate projects at scale. So over 2,100 renewable energy companies around the world already use our platform to participate in 37 available financing opportunities, which total over $1.3 billion of available financing. So our platform is meant to support you at every stage of the project lifecycle, from accessing financing opportunities like DRECs to procuring equipment, to monitoring and verifying ongoing operations. So to start, our software allows you to model your projects and digitally submit proposals to funders. So this is one way that we're supporting the work that Powertrust is doing. Via our platform, you can also access capital from diverse sources, including DRECs, and other types of investors like commercial or even concessional funders. Our team also has extensive expertise with procurement and can help you realize cost and time savings when you're trying to procure system components like batteries, inverters, and PV. And then lastly, as projects come online, our remote monitoring control hardware or integrations with third-party tools allows you to get performance data insights about your projects or about a whole portfolio of projects. And this is significant and relevant for DREC issuance, as you can leverage our remote monitoring tools to automatically collect site data, specifically generation data, and share that with Powertrust. So if any of these areas sound interesting to you, please feel free to reach out. And so I wanted to switch gears and just explain how you'll actually use Odyssey to start the application process for DRECs and to start engaging with Powertrust. So we can keep this very high level and don't feel like you need to write down any of these instructions or links. They'll be all provided after the session today. So the first step in the process will be to complete a pre-screening form on Odyssey's public-facing website, depending on where you operate. So Paul mentioned that Powertrust organizes its application process into multiple purchase programs. So you'll submit your information either to a specific purchase program if you operate in one of those geographies, or you can submit information to the Global Expression of Interest program on Odyssey. So for example, if you currently operate in Nigeria and there isn't a purchase program there, by submitting your information to the Global Expression of Interest program, you'll be assured to get notifications when a purchase program that covers Nigeria comes online. So once you've registered, you'll receive an email inviting you to log into Odyssey, and you'll use the email address that you used to sign up to actually log in, but you'll receive an email with very clear instructions on this. And if you already have an account on Odyssey, you can use that same account. once you are actually logged into Odyssey, I'm going to skip to this last step. You'll complete more detailed due diligence information about your company and projects that you can submit with Powertrust directly on our platform. So once you've submitted your application, Powertrust will receive automated notifications, and you'll receive notifications back as Powertrust reviews it. They have comments if they update your status, for example. So that's a very high-level overview of the process, but our team is happy to help when it comes to navigating this process. And again, we'll be sharing links and more detailed instructions after today's session. So I'm going to stop sharing my screen and we can get to the Q&A. So let's see. The first question we have is asking what the difference is between Odyssey's service and Powertrust, because they both provide some sort of fund. So yeah, I think the way that you can think about the difference there or distinction is that Odyssey is basically the platform that gives you access to a lot of different funds, whether that be through Powertrust or through a concessional finance program or commercial investor. So Odyssey isn't directly providing funds, but instead we're facilitating the provision of funds from other folks out there like Powertrust. I actually had a question back to Paul based on your presentation. So you explained that with the funds from DRECs, companies are using those for a variety of things, like maybe reducing tariffs for customers, for example. Does Powertrust dictate how those funds are used? And is there some sort of qualification process that companies need to go through?
That's an excellent question. Thanks, Catherine. We do not require any specific use of proceeds. That said, we do evaluate applications based partly on how they intend to use the proceeds from a DREC purchase. Those that are going to use it to generate more impact, whether that's social impact or environmental impact by building more capacity, will rank higher in our choices than those that don't have such a use. So, for example, if a project can tell us that they're going to use 100% of the DREC proceeds to reduce the tariff to their customer so that they can serve lower income customers, that's going to rank higher in our choices than one who says it's solely boosting the returns to investors. That said, we do want to encourage improved returns so that people are investing in this space. So we're not limiting anybody in their use of proceeds, and we recognize everybody has different business models. So not everyone is a nonprofit developer. We encourage you to apply regardless. But our mission is to drive impact, so we do focus there.
We have another question. Did Powertrust cover developers in Nigeria? So Paul, do you want to speak to your plans to open up opportunities in Nigeria?
Sure. As of right now, no, we do not have any currently active purchase programs in Nigeria. We are in discussions with a number of customers who have a footprint in Nigeria. And one thing I'll clarify is that's different between renewable energy certificates and, say, carbon credits or offsets. If anybody's familiar or done project financing through a carbon credit project before, is that renewable energy certificates are market specific. The rules that govern how our customers account for their renewable energy are governed by what's called a market boundary, meaning that if I have operations within a country, I have to source my renewable energy from within that same country. So companies will only source renewable energy certificates from Nigeria if they also have operations in Nigeria. Whereas with carbon credits, that market boundary doesn't apply. Carbon is a global gas. So as of right now, no current opportunities in Nigeria. We do expect some of these conversations with customers to move forward within the next 6 months. So we'll certainly keep everyone posted as to when those opportunities do go live.
All right, the next question is, how does the pricing of DRECs compare to the pricing of carbon credits issued by a firm like Vera? Paul, do you want to take a stab at that one?
Sure. This gets a little bit complicated because you have to convert megawatt hours of energy generated to tons of CO2 avoided. And that's going to vary based on a lot of different parameters depending on the project. It'll depend on the baseline analysis that's done in a carbon project. You'll typically start with a baseline study as that will establish what types of fuels are being displaced by renewable energy, which will give you a conversion rate, how you essentially multiply megawatt hours times tons of CO2 per megawatt hour in order to come up with a number of how many carbon credits are going to be issued. So it's impossible to say that on a sort of standardized basis. One of the reasons why we went with renewable energy certificates when we created the DREC initiative is because it's a very simple metric, right? We just take megawatt hours generated and then a price per certificate per megawatt hour. We don't have to do a baseline study the same way a carbon credit project does. So that said, the prices we're offering per megawatt hour for DRECs range from $10 to $30 per megawatt hour. Again, that depends on the impact of the project, the social impacts of the project. C&I projects are going to get closer to $10. Remote hospitals are going to get closer to $30. Carbon credit pricing on a per megawatt hour basis might fall anywhere between $15 and $45 per megawatt hour. It really depends on the project. There's some cases where it might be as low as $5 per megawatt hour. Part of why carbon credit projects are more difficult is because you have to hire a fairly expensive baseline survey to establish what the conversion factor is going to be. So yeah, hard to answer that directly. It's often worth evaluating whether or not RECs or carbon would be the most lucrative way to monetize the environmental attributes from your projects. I can tell you across all of Southeast Asia, RECs are almost always going to be much more valuable. In West Africa, it's a little bit of a closer call, but typically the prices we're offering have been competitive.
Cool. And does anyone else have any other questions? Obviously, if something comes up after we've ended the session today, you can reach out to Paul or I or Girish with specific questions, whether it be about DRECs or Odyssey. All right. Well, it looks like we don't have any more questions. Paul, is there anything else you want to add?
No, just that I would encourage everyone to check out Odyssey's full suite of offerings, including the data collection tools that they offer. Makes for a very streamlined process if you want to collect real-time data in order to generate revenue through one of Powertrust programs. And if you have questions, I encourage you to reach out again through either email, LinkedIn. Very happy to share more or answer questions in the future.
Okay. Actually, we just got a chat in from Uyi. Are there any additional legal fees attached to the issuance of DRECs?
When you work with Powertrust, no. We charge no fees to project developers at any stage in the process. So that will depend on the market participant that you end up working with. At Powertrust, we've streamlined our processes so that we can do it without charging any fees at all.
Cool. So again, please feel free to reach out if you have any questions. The recording of this session, as well as the PDFs of both slide decks, will be shared probably by tomorrow. And thank you again for taking time out of your day to join. And thanks, Paul, for giving us an overview of DRECs.
Thank you very much, Catherine, and thank you all for joining. Look forward to getting in touch with you later.
Thank you.